Hey, I'm Deepika and the firm assigned to me is Power Grid Corporation. Firstly, the values calculated here are my own and they have no bearing or responsibility if they are wrong or misrepresent Power Grid Corporation. In the fundamental analysis, we find basic information of the company as shown here, and it includes the key business lines of Power Grid Corporation, which are the transmission, telecom and consultancy. The Potter's 5 forces and the SWOT analysis has also been dealt with. The effect of 2007-9 recession about the firm, how the firm held itself up during the recession, the market size, the investment and various government initiatives since it's a public sector undertaking were also dealt with in the fundamental analysis. The following suggestions were made: to maintain an efficient operating performance by modernizing, to expand and strengthen the transmission network, to continue to invest in employee development, to expand its corporate social responsibility initiatives, and to increase its commitment towards the green environment. In the ratio analysis, we find that the net current assets are 13,370.28 crore rupees. The current ratio, which gives a sense of efficiency of the company's operating scale, is at a good 1.83, and the quick ratio, which measures a company's ability to meet its short-term obligations with its liquid assets, is 1.8, which is also pretty good. The debt to equity ratio is 2.62 and the EBITDA margin, which is a metric to evaluate profitability, is 83.69% and the price by earnings ratio is 64.81. All this give a sense of anybody who would want to invest in the Power Grid Corporation a good feedback, and it is suggestible for them to invest in Power Grid Corporation. This is a screenshot of various ratios that I have dealt with as a part of the ratio analysis assignment, and they deal with the different ratios for a period of 5 years from March 2009 to March 2013. In the equity valuation, the daily returns on Sensex is taken as an indicator. The beta is found by taking the returns calculated using daily closing prices from the time it's listed. The average return on 91-day treasury bills was found to be RF is 8.61%. Average annual return on the past 11 years is taken as return of market index, that is RM. The beta comes out to be 0.5755, that indicating that this is a slightly defensive stock and it's less volatile to the market. The cost of capital is the weighted average of equity and debt, which is 83.861%. Coming to the two-stage growth model, we assume that it will go at a constant rate of 4.10% for another 10 years, and now other normal firms grow at a period of 1%. The following ratios were found with average dividend per year, and the growth rate is found with 0.0431%, expected interest rate and the intrinsic value of share are calculated as shown here. And the FCFF is found to be 21,108.9 million. The value of the firm is also calculated and the intrinsic value is found to be 3.62703. What does this mean? This means that the stock is undervalued at a price of 103.15 rupees, and also the dividend discount model is not applicable in this case because the payout ratio is not constant and the rate of growth of dividends is greater than the required rate of return. In the FCFF model, it requires that the company should have a positive value of cash flow of the firm as well as stable debt levels. Power Grid Corporation of India satisfies both making the FCFF model and a suitable model of valuation. Thank you.